We are recording, and Moongod is there. I'm going to invite you to speak, buddy. What is up?
Not much, man. How's it going?
It's going good. It's going good. I'm running. I'm not running late, but I got here right in time to start this. I was talking to a guy at work, bigwig in the tree farming business, and it was pretty cool getting to talk to him. He's like literally the biggest landscaper in probably in like the southeast or the
Oh, wow.
southwest, yeah, southeast. Yeah, yeah,
That's
yeah. I mean, it's cool talking to a guy because like when he starts telling you like how much money he makes, which he wasn't bragging or anything, but he's like, yeah, my first year I was doing this, I made like $900,000. I'm like, wow. And he's like, so what about you? What's your story? I was like, well, it's not that inspiring.
we're still working on it. Ours is going to take a few years, but we're gonna.
Yeah. I was like, I had a pet sitting business. No, I didn't. I didn't mention crypto because he didn't seem like the type. But uh, all right, we got people flowing in. We got Yanni here, Beefy. We got Captain Crunch, Naroff, Crypto Gale, Blacksmith, Forge, Limp Piece, Timber Sky, Timmy Tim, Funny Toro, Davey, and Bob T so far.
I'm curious how many people got absolutely shellacked by that fake news yesterday
Man,
about the Bitcoin ETF or whatever it was getting approved.
I don't know. I didn't.
God, they messed that up so.
Like who was spreading that rumor? Like why someone benefited from that? I'm
I think it
guessing.
was Cointelegraph is who was spreading the rumor. Um, And it was a situation where, if memory serves, somebody said something like, I think it was like $100 million got liquidated on absolute just, BS information.
Wow. Wow.
But I have some good news about that. We did
Sweet.
not get liquidated, and we actually did really well on that. So it went great for us.
Well, that is exactly what
Happy
everybody
position.
wants to hear.
Yeah. So I think we can give it a few minutes. We'll give it to about 450 here, and then we can just, well, I mean, in fairness, we were also on Ethereum, not Bitcoin, so like it wasn't going to hurt us as much. I think Bitcoin went up like 8% or something like that, was like as high as it got.
Yeah.
And Ethereum was like 4% or something, so it's like we didn't have as much of a, fluctuation. But we'll give it like 2 minutes here, and then we'll jump right into it. I got to
All right.
make the wife some dinner, so I won't be able to stay on for like an hour and a half like we did last time.
Yeah. No worries. We'll make this quick and to the point. I also got some talking points, so we can run through those real quick. Let me ask you though. You said that uh that you guys like didn't have too many effects from it because you're in Ethereum instead of Bitcoin. Like, how is it going to be like in the bull run when it's just going crazy volatility? Like, that's gonna be mostly good for the bot, right?
Oh, it's going to be amazing for the bot.
Okay.
Volatility is like absolutely king for our bot to be able to make money. So it loves it when the market is like, goes up 3%, down 2%, goes up 4%, down 6%, all that kind
Sweet.
of stuff. It loves that. It eats it up for breakfast. Like,
Sweet.
um, it's optimized to do well during like a market like this. And I've got some numbers to go over regarding that as well too, because it's a little crazy how good we actually did, all things considered, for effectively what would be the first month here. But it's a situation. Well, it's like the first 27 or 28 days.
Yeah.
So not like a full month, but a February month.
Right.
But
Right.
yeah, during the bull run with the volatility there, it's going to be absolutely bonkers.
That's awesome.
I mean, that's kind of one of the things that we were talking about when we said this thing did like 8 to 12% without compounding anything on average month to month, and it went from $10,000 to $400,000 in about a little under 3 years. So
Right. Right.
it very much so is a case where Like we're talking like multiple X's here, that this thing could potentially do. And
Sweet.
again, that's without compounding anything. So that was just like, hey, it just, it traded every single day with $10,000, and that was the total return. Was it would have gone from 10,000 to 400,000, and it was like 413,000, I think, or something like that.
That's awesome.
But yeah, compounding over the last 3 years, that's where we got the what was it, 20 quintillion or
Yeah.
something like that,
Yeah.
is what it would have done. From 10,000 to 20 quintillion, because
Yeah.
that's a real number. Um, in terms of actual money. So, yeah, it's going to do absolutely phenomenally during the bull market. It's gonna kick teeth in and
Hell yeah.
take names, no issue at all. Like, we're stoked for it.
That is what I'm talking about right there. Sweet.
Yeah, and again, with the compounding that's able to take effect of, it's really just gonna do so much more. Like, I think we could see, and this is why we're talking like 3 years. Is I think we could see within that 3 to 4 year time frame, if the bull run starts next year, I think we could see stage 3 by year 3. By the end of year 3, we'll be in stage 3. Again, now there's a lot that's got to go super, super right for that. That is as optimistic as you will ever hear me be.
Yeah.
Our goal is within about 6 years to hit that stage 3 mark where we feel we're going to be happy with it. But if the bull market goes well and everything goes correctly and we don't have any problems, we can continue using the bot to the same capacity that we're expecting here, and we don't have some absolute nonsense like all of Europe comes out and bans crypto kind of thing.
Yeah.
I think we'll be in a really good position to see 3, probably by like year 3 or 4. That's my best guess scenario. The more realistic scenario is probably by about year 6, I would say.
Yeah. All right. Yeah.
And that's why we have that in the white paper, though. But
Yeah.
I could be categorically wrong. Like, again, we can't predict a bull run in the same way that we did historically, because we have to remember that this wasn't a normalized bear market that we went into. Like, there were a lot of things that really kind of pushed this down even further. You have to take into account the recession. There was that false uptick that we saw during COVID in 2020 when a lot of people were just handed money. So that kind of brought a lot of funds into the market and stuff like that as well too. And then we also have to kind of look at a lot of the negatives that occurred as well, such as the FTX situation, the Luna UST situation, a lot of those other major funds and capital ventures having issues as well. So it's like, this wasn't just like a standard bear market where it's like, hey, people just aren't really all that interested in buying crypto right now. It was, to say manufactured is not the right term for it, but it's one of those things where it's like, it's a bear market of the crypto's creation, kind of like the housing market crash of 2008. Like, that was the creation of the banks and the lending industry, right, doing some stuff that they shouldn't have done. Whereas like this bear market we're in right now, while it would have happened, and I don't think it would have been as bad, I think we probably would have seen closer to the $40,000 to $50,000 range of Bitcoin. Ethereum should have closer to about the $3,000 range, in my opinion. But it very much so was a case where, because we had all of these people that weren't necessarily doing things the way that they should have been doing, and we're seeing how bad it actually was as this information is continuing to come out. I think that's what hurt it and caused us to crash even further. But yeah, I think if we hit that bull market, we're gonna be doing a lot better than we expected. Again, remember, the numbers that we've provided are if the bot performs at anywhere from about 10 to 25%, of
Right.
what it's capable of doing.
Right.
So that $400,000 mark that I was talking about, over that 3-year time frame, that was about 10 to 25% of what the bot was actually capable of doing. It
Wow.
was closer to being able to do about 1.2 million, like everything being perfect. We hit every single mark, perfect every single time. It would have done 1.2 million without compounding.
Good
So
Lord. Good Lord.
yeah, it's a massive increase.
Wow. Well,
Yeah,
that's
yeah. So it should have.
Moongod. Speaking of
Sorry.
the numbers, you'll have to read the article I wrote for Medium, just yesterday, and because the 10% a month numbers, like by the time we get to stage 3, it says like 14,000 a year. Like, what what would that mean? That we're just like we're turning it to stage 3 at just a lower amount? Because with the 15% numbers, we were looking at like 200,000 in stage 3. Um, I was just like,
Yeah, so it just depends on what it comes down to. So not every month is going to be or not every year is going to be an average of 15% a month. So that's where it kind of comes into play there, where it's we could have a year where the average return on the year is only, I don't know, like 10.2% or something like that. We could have a year where the average return for the year, in terms of like month over month, is 17% or 20% even. So it's just one of those things where it's like, how does the market kind of handle certain situations? Can we continue to kind of produce even as things scale up? If we get to the point where, again, we're looking at managing anywhere from like 50 to $100 million, it may be in our better interest for us to de-risk and say, okay, well, we're only going to shoot for like 5% each month
right,
for a multitude of reasons. Like, if liquidity is not there for us to be able to place those trades, we can't force the trades through. Otherwise, we run into a situation where, just like any other token that's out there, if you're trading on super low liquidity, the moment that you buy into it, it's going to shoot up the price. And then if somebody else sells, it brings the price back down before you can take profits. And so that's the
right,
issue that we kind of face there.
right,
And if we get to that point, we'll make a couple of adjustments here and there. Holders will be, well aware of this. But again, one of the things that I wanted to kind of bring up regarding that is, like, 3% per month on $100 million in funds that's being traded is the same thing as 15% per month at $15 million being traded.
right, right,
So
right.
it's
Yeah,
very much so this case where it's like, we don't have to do as much
yeah,
in order to equate out the same returns.
yeah,
And that's really kind of the mentality on it, is that, like, we obviously don't want to be moving the market. As liquidity begins to thicken as we move into the bull run, which is definitely the case, we can take a lot more advantage of it there. But it also is very much so a case where, as time goes on, we may not need to do 10, 15, 20% per month. We may only
sure.
need to do at max 5% per month for us to hit those same numbers that we'd be happy with, especially if we're at the point where we're just trading much higher amount.
Right, right. I gotcha. So the discrepancy between the 10 and 15%, like the starting amount each year would be the same. Is that what you're saying? And if it made 10%
Well,
monthly, it would.
so so let me clarify that really quick, because the 10% that's kind of showing in the numbers, that's if we did 10% every single month over a 6-year time
That's
period.
what I thought. Yeah.
Um, yeah, it's. I hate to be the one to kind of just be like, hey, this is, it's a very dirty way of doing numbers, because we don't have the ability to be able to say, hey, every 12 months we're going to have this random variation of numbers, and then we're going to kind of average it out and go from there.
Mm,
So it's like, this one just assumes that we're going to do 10% every single month. So right now our bot, it's set up to do an average of roughly around 8 to 12% every single month, which right in the middle of that is 10%. Does that mean that in a slower month, we're going to do 7%. A busier month, we'll do 20%. Well, what's the average of those two? It's 27 divided by 2. You're looking at 13.5. So that's still higher than the 10% there anyways.
Right.
So that's really kind of the best way to look at it, is like these are averages of a couple of different things being in place. So you have to look at those numbers and understand that they're not necessarily like, hey, this is a guarantee we're going to do 12% every single month or 15% every single month. This is like, hey, if this averages out to be 12% every month or 15% every month, that's what the numbers are going to return. But again, that's also why we're talking about the time frame being closer to like 6 years versus, a guarantee of saying, hey, it's going to be 3. If we do 15% every single month, which again, I don't think will happen at any point in time, we would hit stage 3 before the end of year 2. Just
wow.
for the record. It's just, that's not going to be the case. We won't do that. It'll never happen. But it's just like, you can think about the numbers in that aspect there, where it's like, hey, we could really kind of do this if it does some absolutely insane stuff. But it's just, hey, this is kind of just an average number we're throwing out there to provide as something for people to kind of look at to get an understanding of like how this is going to kind of work with these baseline returns. So it very much so would be a case where as we start to get some more of these actual traded historical data, we can provide some of those in terms of like a calculator going forward. And that's one of the things that we're looking at adding to the website as well, is a calculator. So somebody could put in some numbers and be like, yeah, what's it at 7%? What's it at 13%? What's it at 22%? Like, if it does something crazy. Again, I think that would be absolutely unrealistic and out of range if somebody were to say, hey, what is it going to do if it does 22% every single month? Please don't do that. Don't ever think that's going to be the case or that's going to happen. That'll never happen. But yeah, that's why we kind of provided those numbers like that.
Well, during the bull market, for a period of time, we'll see numbers like that, right?
I mean, it's definitely possible. Again, like I said, the numbers that we provided, that 8 to 12%, is roughly about 25% of what it could do.
I got you, and that's keeping the risk extremely low by only doing 25%.
Lower than the previous bot that we had, yeah. So like,
awesome.
In that one where the risk factor was, Ethereum would have had to get up to like $109,000 or something like that. This one would have been, it would have required it to get to like $240,000, I think is the math that we did on that or something. So it's drastically reduced the amount of risk that we have, while also allowing us to take a lot more advantage over lower volatility than what we were able to do previously. So
great.
That was part of like the whole big change that we made. And that's why I'm really excited about the numbers that we can kind of give you here. So for the last 28 days, you guys might, have noticed that the market's been fairly flat regarding a couple of instances, the one big dump and then the one big spike. But the bot did 7.5%. So it did 7.54% in total over the last 28 days, which is insane considering the fact that the market hardly moved up or down at all. Yeah. And that's what I was talking about when I said that volatility within the market is super, super huge for us because we're able to take advantage of it. The bot did 7.5% in almost no volatility. And what I mean by that as well is that we had a total of 8 days, 3 days for maintenance and 4 days for maintenance and 4 days of low volatility, I believe is what it came out to, where we effectively just didn't have any trades go through. So it was a situation where even with all of that low volatility in place and everything that we were able to take advantage of, we still did 7.5%, which is absolutely disgusting on effectively 20 days of trading. That's where we were kind of at.
Right.
So, I mean, that's one of those things where it's like, it's better than what we ever could have hoped for, given the specific situations that we were in terms of like market volatility, market trends, and everything like that. It's absolutely disgusting what this bot did with low volatility and having a phase off where it was having to do maintenance and stuff like that. Which again, we haven't had to do any form of maintenance since those first 3 to 4 days of maintenance within like that first 2 weeks there. So
Cool.
yeah, I mean,
That's
it's
great.
been running flawlessly without any issues since.
That's amazing. Would you say that, like, let's say we do our next AMA next Tuesday, would you say that that would make up the first real full month of trading?
That would be fair. I mean, while I want to clarify on what I'm kind of saying there, we still have to count those days where it was too low volatility for us to place a trade.
Sure.
It is a case where we would probably hit around again the same thing, assuming we don't have any days of low volatility next week or this current week. Yeah, we would probably hit about 28 days of trading total. Now, we still have to account for every day that the bot is active, because that would just be deceptive if we were
Sure.
to say,
Of course.
like, imagine if we were to come out and say, yeah, the bot did 37% on, on all the days that it traded, and then, come to find out that it only actually was able to place trades like, a total of like 200 days or something like that. And it's like,
Mm,
yeah, it would just be dishonest, I guess is the
sure.
best way to word that, to say, hey, we're only going to take the days where it actually traded. Um, but yeah, that the reason why I wanted to bring that up is like when it's placing these trades, it's knocking it out of the park. And it's not going to place a trade in a position where it doesn't think it's going to win.
Awesome.
And that's why on those low volatility days, it doesn't just throw money at the wall and hope it sticks kind of thing. So I guess that's the best way I can kind of answer it. Assuming that we have an entire week where it doesn't miss any possible trades for like low volatility reasons, yeah, we'd hit like 28, 29 days of trading, and hopefully we'd see something close to about the 8.5, 9, as high as potentially like 10%.
Cool.
If we have a really good week and some nice volatility in there.
Right. All right. Blacksmith Forge asking, the bot still has the 100% win rate.
That is correct. Still 100%.
Awesome. Awesome. So what was like the total amount that it made just this last week since last time we spoke?
Let me check that real quick.
I think it would be like 0.8%.
Yeah, it was 0.7999432%.
Okay.
Yeah. So in case anyone was kind of curious about this, as we talked about, we adjusted the amount that we had in the bot from 2,000 roughly up to 7,000 in both bots. And yeah, so it did about $70 this past week, even with that low volatility. We had one day where it didn't trade, and then we had that one day or yesterday, where we had that spike with Bitcoin and Ethereum for that brief period of time, and it was able to gobble that up really, really quick and did like a 0.5% in one day, which was really nice.
Yeah. Not like a 4% day, but still not bad.
Yeah. Well, in fairness, with the 4% day, we had like it wasn't just like a straight line up and then a straight line back down. So there was like a lot more that went on in there as well too. So with this one, it was literally like straight line up, and then everyone found out it was fake like within 5 minutes, and then it was like straight line right back down to where it was before. So it was like the bot didn't have really any kind of time to like accumulate, because it just went from like, what was it? It was like 28,000 to like over 30,000, and then like within 5 minutes it was back down to like 28.5 or something like that.
Yeah.
So it was like it just, yeah. I mean, it was a situation where it was like, oh, oh, great news, amazing. And then it was like, oh, it was a lie. Everything's going back to what it was before.
Yeah, yep.
So,
I know I fell for it. I mean, not that I don't even invest in Bitcoin, but like I mentioned it in our Discord. I was like, "Hey guys, this looks pretty cool." I don't even like know all the ins and outs of what the hell, Bitcoin ETFs would mean, but I was like, "This seems like a good thing." And then started hearing it was fake news, and so I deleted it.
yeah, Oliver just out there providing fake news to people. I see how it goes.
Just call me CNN right here. Anyways, all right. I had something interesting come up. I was talking to Kevin from PTC. He's not in the crowd right now. But he said something because what was the conversation I was having with him? Um, he had said something about I don't know, volatility or something like that. And then I mentioned, well, what if you have a bot that's doing long and shorts? Doesn't volatility, isn't that a good thing? And his response, he gave me back a pretty long response, and it involved some information that I didn't really ask for, but I just wanted to get your thoughts on it. So let me read what Kevin wrote to me. He wrote, long and shorts are risky even without big moves. You could see a gradual shift against your position. This is why successful trade bots require human monitoring. The AI argument for automated monitoring doesn't hold up because one, not enough data with current bots to verify that claim against inherent risks, and two, even advanced AI models lack the ability to do dynamic risk assessment based on non-direct market-related factors like wars or Fed rate hikes, etc. Until AI can take factors like this into the equation effectively, they will never be as reliable as an experienced market trader. So he was saying like human monitoring is the best thing for a successful trade bot, and and I mean I understand what he means. I think he just means that like people need to pay attention to their bots from time to time. They can't just like fully automate them and walk away for 6 months. I think that's what he meant.
Yeah, I mean, I don't want to, you know, create any kind of like this feeling of bad blood between us and them or anything like that. So I want to clarify that first.
Sure.
I think he's wrong. And the reason why I would say that is we actually see algorithms, AI, everything like that being used currently, in the standard stock market and exchanges and stuff like that. Not even talking about crypto. So it's the biggest issue that we kind of face between the crypto side of it and like standard traditional stock or mutual fund ETF trading is that the trading on standard stocks and things like that are much more regulated. That's a better way to say that. They're much more regulated than they are on our side over here. So in terms of what you're able to kind of do and what you're able to get away with, using a bot, we kind of built upon those same principles. So with the way that our system works is that we continue to effectively, when we're on the, I'm going to say, wrong side of a trade, we continue to build our position. And the difference between us and like a different, setup is that while our position is being built, we're not risking something above and beyond over the top crazy. So like even with a 3-4% swing that we saw with Ethereum the other day, it was very much so a case where, it was in one position, that position closed out, it opened up a second position moving in the opposite direction of that to expect and predict the pullback, which it did. And so we were able to take full advantage of that with a short position actually being opened up about halfway through up that spike. Now, again, it didn't continue to increase, which is why we didn't get to continue to kind of accumulate our position and really come out with a massive, massive bag at the end of that and be able to kind of get this big percentage day like we did the other one. But that's effectively the way that it works here is that, with the additional positions being opened, effectively kind of run into this ever growing larger position that we hold. And the positive with that is we can take a much higher amount of profit and the point where we have to exit a given position at a given point in time also increases with it as well. So like the best way to think about it is, as the price goes up, if we're in a short, it continues to accumulate its position, and then once the price kind of comes back down, its dollar cost averaged its way back up into it, where it still only has to pull down about a 1.5%. And again, those are just kind of like fake numbers. We have a lot more coming, you know, into play kind of in the back end side of it. But with both long and short positions, if we're in a long, as that happens, it immediately closes out that long position and says, okay, well, this is trending upwards. We need to open up a short so we can take advantage when it pulls back. And that's really kind of where it's at there. So the only way that we would run into those risks is, like I talked about before, we were in a short position in that Ethereum one, and it had $109, Ethereum requirement for us to have been liquidated.
Right.
And that's exactly what I'm kind of talking about here, is that like that was a short position that we opened going into that Ethereum spike, months back. And so with that happening at that point in time, we said, okay, well, what is the risk that we face here? Okay, Ethereum has to get to $109,000. What's the likelihood of that happening? Pretty much zero. The only way that we could think that something like that would happen would be the CEX that we're on just liquidates everything, just steals all of our money. And that's really kind of why we're in that position that we're in, is that we're figuring on our side over here with the way that we open these positions and the way that our bot recognizes the positions that need to be opened. Again, we're not 100% hands off. I'm not going to make the claim that we are, but to say that you have to have somebody manually trading it is just not accurate. I mean, you don't have to do that if you build your system around, that functionality. So again, the best way to kind of look at it is like, back when Bitcoin was created, it had this very simple mindset, this very simple mentality, didn't have room for expansion and growth, didn't have really great room for like a layer two or anything like that. Then we got Ethereum. Ethereum great for a while, but then because so many people were using it, gas prices increased to crazy amounts. But Ethereum also allowed for a much more compatible layer two in terms of things like Optimism, Arbitrum, Polygon, so on and so forth, et cetera, down the road. And that's very much so, the case in the position that we're kind of in here is that, God bless Warhaven and, the Warfi guys and Kevin for everything that they've done regarding, the bot trading side of things. But we've had almost 2 years to kind of build upon the stuff that they've done. So it's not that I'm saying that they're doing anything wrong. It's just, it's kind of we're in a better position where we get to kind of build upon the foundations that were already set out for us. We're not having to build everything from scratch ourselves. We can look at the way other people have done things. We can look at the bots and the way that they've changed from 2019 all the way up to 2023 here, and that's how we can fully take advantage of what we're looking to do here and integrate some things. I mean, just look at the way smart contracts have changed. They've gotten drastically different, from initial release all the way until 2023 here. I mean, the stuff that people have come up with and done, is just absolutely insane compared to even 3 years ago. So
Yeah.
I mean, I think he's right to a certain extent, but at the same time, you know, there's a lot more out there that can be done that, when you have a very specific way that you're doing things and you have a very specific way of looking to continue to have, that revenue come in. I'm not saying that they're unwilling to change. What I will say is that, you know, their aim is a certain level of consistency, and I think that level of consistency is not nearly as efficient
Well,
as what we've been able to do here. That doesn't make them bad.
sure.
It's just not the
They actually agree with you. If I listened to the last Warfi AMA with Coach Andrew and Jason, and they are moving towards automation, like being more automated. to cut down on their overhead. So they agree with you. They're coming your way. So, yep.
We're gonna lock the doors, make sure nobody else finds out how our bot runs. So that way, only our guys get a piece of the pie over here.
Heck yeah. Um. All right. Let me see. I was pointing out the
I got
one of the
about
things.
10 more minutes. I
Yeah.
just wanted
Okay.
to preface that super quick. Got about
Sure.
10 more minutes, and then I start dinner for the wife.
Yeah, of course. Then I'll skip forward. Someone had asked what the difference between the Prisma tokens and the Prisma NFTs are going to be regarding payouts, fees. Like what can they expect from the Prisma token compared to the NFTs? Because with the NFTs, one point I made in the article is there's no fees. Like we just don't charge you any fees. The only time we take profit is the same time as everybody else, or meaning the teams.
Correct. Yeah.
So that was something that's very unique about the Prisma One NFTs, and that was a point I made. And then people were wondering, well, what about the token, the Prisma token? What's the like difference there?
Yeah, so really the only difference is that the Prisma token has a 4% buy fee, 4% sell fee. And that can be allocated in one of three. Well, it can be allocated in a total of three ways, depending on how we want to break it down. It can either go to backing the liquidity pool. It can go into the ITF, which is how we farm rewards and then pay those rewards out to the holders in the form of stablecoin or, vault tokens, or it can go to the treasury for expansion. So those are the only three ways that we can kind of do that stuff. But yeah, the way that the team gets paid out regarding like the Prisma token itself, same basic premise. We have that structure kind of built into the rewards that are earned on our side over here. And it's a case where we also have a very small allocation of tokens. We have 1% per holder,
Okay.
sorry, 1% per team member.
Right.
So yeah, like,
Cool.
and to be clear, that 4% on the buy side and 4% on the sell side will absolutely go away when we move to well, I would say when we move to our V2, but no, it'll be when we move to what'll be our V3. So that'll just basically just once we hit a point where we're happy with the amount of returns, that we're kind of getting, the ITF is at a certain value. We're just going to turn off those fees because they were never meant to be a permanent thing. That'll also give us the ability to be much more lucrative, or I guess like eyes on for some larger dexes and stuff like that. We can look towards like a CEX or anything like that, but I'd want like a actual like tier 1 CEX to pick us up versus say, like some of the other ones that other projects have gotten into, which have turned out to just be like just scams and that's it.
Yeah.
Yeah.
Okay.
And that kind of the best way that I can answer that is that 4% buy, 4% sell, and that goes, back into those three things. And we use that to kind of further grow the project and the system and everything. And then eventually we'll just turn those off.
And so the profits that are made with the ITF, what percent is given out to holders and what percent is reinvested?
Yeah. So the easiest breakdown would be checking out our white paper for that kind of stuff, because nothing is really changing from the V1 to the V2 other than the fix on the exploit.
Okay.
And you guys are going to get a different token. But yeah, if memory serves, because we have it broken down into like three different segments for the way that it does the payout. If memory serves, and I haven't looked at it in a little bit here, it should be 30% goes to the holders. I believe 30% gets reinvested. 20% goes to the liquidity pool. 10% goes to, I think, the treasury, and I think 10% goes to the team in terms of payout.
Okay.
But I could be wrong there with some of those numbers, but I think it's 30, 30, 20, 10, 10, if memory
Okay,
serves.
cool. All right. Let
And
me see.
as a heads up, that'll change though. So like when we move to V3, 60%, I believe, is the baseline that we're looking at having for being paid out. And then it's 10, 10, 10, 10. So it'll be 60% paid out to holders, 10% goes to the ITF for reinvestment, 10% goes to the LP, 10% to 10% to the team. So yeah, I think that's the way it'll transition, and that's kind of like the baseline minimum. We might adjust that, depending on how we kind of feel, but we're always going to have some portion of it reinvested, because when we move to that, that'll be after we cut out the taxes. So it'll swap to that when we cut out the taxes and stuff like that. So there'll be no more buy or sell fee or tax or whatever you want to call it, and then yeah. Minimum 60% is going to be paid out to the holders, but
Awesome.
there's a lot more complicatedness, I guess, to the Prisma token than the NFT, because it's basically two sides of a seesaw. You've got one side, which is the payouts, and the other side, which is the amount of tokens that you hold. So effectively, the way that the system works is, as people sell off the token, your percentage of the tokens held in a given wallet is increased. Hold on, got my little guy here. One second. Sorry, my youngest came in. His big brother apparently yelled at him for some reason. It was probably for safety purposes, so I'm taking it with a grain of salt.
Yeah, I gotcha.
But yeah, the way that it kind of works is as more people sell off the token, your percentage of tokens held is increased, and we only pay out to tokens held in wallets. So like the liquidity pool doesn't get anything.
Ooh, so if
you
a
know,
whole bunch of people sell, that's actually good for you if you're a holder.
right, and the positive with that as well too is that it works both for the people that get in early and the people that get in late, and that's one of the things that we kind of want to resolve with this is, people generally when they get something late, like let's say they get into one of these rebase systems, because we were all in those for a while there. I mean, between people in Seifu, Titano, Sphere, all the nonsense that was out there.
Yeah.
If you weren't getting in at minute one, you're set way behind everybody else. Unless you get lucky and somebody does this massive sell-off, you get in at the bottom or something weird happens. But it's very much so a case where we looked at a lot of projects and we said, like, hey, we want the person that gets in at the beginning to be in the same effective position as the person who gets in, at the end. The only difference that we want is that, we want people to be able to buy and sell, without any kind of issue. And, those that are going to stick with us and, be a long haul, it could be a situation where you could see somebody that ends up owning like 5 or 10% or something like that. And they could actually own 5 or 10% of all of the tokens, but it could be a case where, since we have, 50% of the tokens are in the liquidity pool, they actually own, like 25% of the amount of tokens that would be, or is it 25% or is it 10%? 10% of the tokens that will receive those payouts. So
Right.
it's all set up to kind of, fully balance itself out for the liquidity pool, people buying and selling. And then the positive with it as well, too, is that you can't really game the system and, buy in just before we do the payout and then try and sell, because you have to, at a minimum, in order to make the amount back, have to purchase more than 8% of all of the tokens that are held in wallets. So as an example of such, if half the tokens are out there, you have to purchase, I think it's like something like 11% of all tokens in circulation in order to balance that out, to be able to make a profit on that, which
Right.
means that the price is going to skyrocket. And in doing so, you have to hope that the price in between you buying those, us taking the snapshot, us depositing them, that nobody else sells. So it's not going to happen. So
Yeah.
it's this phenomenal way that we've got the system set up, and it's just really kind of allowed us to do, some of these other things, like the Prisma NFT, and bring some of
Yeah.
those processes kind of into that, and allow us to kind of expand into a different direction, create revenue generation through the bot and the NFT, and then have that kind of funnel and come back into not only the Prisma token itself, because we have, those NFTs, and some of the payouts that are going to go there are going to be going to Prisma holders, via that method. Not just for those who personally own it, but when we receive some of those, we're going to, end up paying out some of that to our holders as well. But it's gonna be the same thing for the one team and the one token, where they're gonna see drastic, positive, increases as time kind of goes on, as all of these, real revenue structures are put in place, and we're
Yeah.
starting to earn that what Lucky likes to call that honest money.
That's right. Honest wealth. Yep. Oh, Lucky's been giving us some good lucky wisdom the past day or so. All right. Well, I'll let you get to cooking. As always, we appreciate you spending time with us, Moon God, and sharing with us what the bot is doing, and just sharing your wisdom and knowledge with us. Thank you, everybody in the audience, for being here. Thank you, Yanni. Says great job, guys. And yeah, this was good. This
Glad
was
to be here, man.
short and to the point. Yeah, man. Always a pleasure talking to you.
Yeah, and if there's more questions that you want me to just kind of do, like like to just answer those, you can absolutely just shoot them over to me, and then we could throw them up in another Medium article for people to check out. That way, in case there's questions that I wasn't able to answer here, or anything that gets kind of missed there, we can definitely do that as well.
Sounds
So
good. Sounds good.
I'm all for it, man. It's been a
Cool.
pleasure as always. I'll catch you later.
All right, man. See ya. All right, guys. See ya. See ya.